folks. Welcome to Best Stock Charts for the coming week. This is Bob Desmond, and we're going to go over a few charts here that I like for the coming week. We're going to discuss our macro view on the markets, meaning do I believe that they are beginning to break out or break down? And the first couple of charts here, the TBT and a chart of Deutsche Bank, will help articulate my thoughts on the market. Immediately following Best Stock Charts, we're going to do a deeper dive into how we closed out the week last week on the major averages. We'll talk a bit more about where I think this market is going in the coming week and weeks, what has me concerned, and we'll finish off with a discussion with regard to our positions. So if you're not currently a member, please sign up for the 14-day free trial offer. Cancel at any time. Let's get to it. Let's begin Best Stock Charts off with TBT. Now, the TBT is the ProShares Ultra Short 20-year Treasury note. So what that means, let's go to a weekly chart first. What that means is that if you're seeing a move higher on the TBT, that means that you are seeing yields get pressed up higher as well because bonds are dropping. And we're going to talk about the bond market in greater detail on the week ahead commentary with members, but for the purposes of talking about trades that we may put on in the coming week and weeks, let's talk about the TBT. The TBT has been forming a beautiful inverted head and shoulders setup, left shoulder, head, right shoulder. We broke out back here in February. We've been pulling back, retesting, support. It held for quite a while until we broke down below support the week of August the 20th. Then the following week, a very bullish event occurred, and that is we gapped up higher. Normally, when you get what I call a breakout point failure, meaning you give up what was support, now becomes resistance again, that's a major problem for whatever index or stock, whatever you're charting, whether it be a cupcake, it doesn't matter. What matters is price action, and we had broken down below key support, but we gapped up the following week. We discussed it with members. Then last week, we had a continuation move higher. Have we broken out yet? Should there be fear that the bond market is coming under a tremendous amount of pressure? We haven't broken out yet, but there should be a build of fear. Why? It's because yields jacked up higher last week on strong wage growth and strong employment numbers. So we are very close to breaking out on the TBT on a weekly basis. Now, on a daily basis, which makes me all the more optimistic with regard to the longer-term performance of the TBT, we have already broken out. We were in a tight triangle formation on Friday. We broke out, and we did so on volume. So the TBT is looking good as a long trade. Again, the TBT puts you short of the 20-year bond price. Members, more to come here. Another concern I have about this market, besides rising interest rates, and before I proceed further, I want to talk about interest rates and their impact on the market. Because you may be saying, Bob, interest rates are going higher because of good economic data last week. And you would be right. So you would expect to see that the chart of the S&P 500 and the NASDAQ reflected the optimism that the economic data brought with it. But they didn't. They closed down. And in the case of the S&P 500, it closed down big time. And I'm going to talk about it more with members. Don't look at the chart of the spiders, the SPY. You must look at the SPX. Members, we will be talking about that chart and that setup, the very, very bearish setup, in a short while on the week ahead commentary. Stay tuned. We're going to segue right into it after Best Stock Charts. Now, back to Deutsche Bank. Deutsche Bank has been a thorn in the side of many for quite some time, because for all intents and purposes, it is the JP Morgan Chase of Europe. It is a massive bank with a global reach And if you go back and just simply take a look at a quarterly chart and you overlay the price performance of Deutsche Bank relative to the XLF, we'll make it blue. All right, so here's Deutsche Bank. Again, one of, if not the largest bank in Europe, just putting in lower highs and lower lows. Here's the financial crisis. We are below, and we have been below for quite some time, several years now, below the lows of the financial crisis. And Deutsche Bank, which earlier in the quarter caught a brief reprieve from the sell-off, is now giving up those gains and quite possibly going to break the $10 mark, which is very, very bad. You'll have a lot of concern out there in the market when you have a bank, especially one as large as Deutsche Bank, trading in a single-digit range. It's not good for confidence. So overlaid here is the XLF, and you can see the relative underperformance of Deutsche Bank relative to the XLF. Now, on a monthly basis, here's where we had a bit of a reprieve in July, and we have given back much of those gains. And if we take out 1094, I think that we'll retest 1036. If we retest 1036, we will be looking to open up a short trade on Deutsche Bank, because I believe that if we see the single digits on Deutsche Bank, you'll see a significant sell-off on the bank. I don't believe that we have any historical data. Let's go back to that quarterly chart to imply that we have support below, and we do not. Let's select 100 years. Yeah, nothing. We have no historical support below. So it's not ready to be shorted yet, but quite possibly very soon. And if Deutsche Bank goes you will hear the conversation go very, very quickly to, not so much conversation, more speculation with regard to who has, let's throw some air quotes up here, counterparty risk. In essence, who does Deutsche Bank have exposure to that can catch the cold or infection that currently sits with Deutsche Bank? And that could cause a contagion. Weekly chart. So on a weekly basis, here you have it. We're in a tight triangle formation. We are very close to breaking down here. Might we break out? Sure. We've been consolidating for a while. It's possible. I have Stokes that are trying to hook back up here. So by no stretch is it a foregone conclusion in my mind that Deutsche Bank is going to break here, but I think there's a very, very strong possibility. Last week's price action was very similar to the prior weeks. Bearish key reversals are not what bottoms are made of. They suggest that we're probably going to head lower. Now, down volume has dried up quite a bit, but so is up volume. So the jury is out here, but all eyes should be on Deutsche Bank. All right, Facebook. I'm going to do at the request of one of our members, a post-trade review with regard to Facebook and why we shorted it. We booked profits on Friday, but it's on our watch list at current because I still like it as a short. However, not right now. I don't think that we're just going to continue to go straight down. Now, one of the reasons why we stopped out of our trade was because we hit historical support. There was good economic data on Friday morning. So it being short covering Friday, you see a lot of shorts tend to cover ahead of the weekend. We anticipated a rally back. We got that rally back, but we were able to lock in a profit on our short. Now, do I believe that Facebook is done going down? No, I do not. I think we're going lower. And I believe a lot of the reasons why Facebook is going lower are self-inflicted reasons. Now, in the short run, daily chart, I mentioned historical support, and that support level was right here. Now, when you take a look at a daily chart, you could see that We flashed a bottoming tail at key support on Thursday. On Friday, we failed to take out Thursday's lows, and we knew that we had historical support here, as evidenced by the fact that it was resistance back here in March, then again in April. So as we began to reverse off the lows of the day, our stop was triggered and we were taken out of the trade. So more to come here. I'll go into greater detail, but we booked profits. I think that we could quite very well rally here on Facebook. I think it'll be a short-lived rally. I think all of these FANG names are going to correct further and throw Apple in the mix there. If you want to hear my commentary with regard to why I believe that the FANG stocks, the Web 2.0 stocks, are probably moving lower, I go over my reasons in several commentaries that I made on YouTube. I'll link to them at the end of this video because I've been predicting sell-offs in these names for quite a while. Take a look at Google. Here's a weekly chart. I warned several times in the past that we had topping action on Google, that if we broke 1204, that in all probability we would head considerably lower, and that's exactly what happened last week. This is a weekly chart. Here are the topping tails. That's a sign of sellers above, profit takers. We were putting in lower highs, and the crack below 1204 and a close there on a weekly basis would set the stage for a sell-off because Google would now be a broken stock. Why is it broken? It's broken because it's now putting in lower highs and lower lows. Now, what do I think is going to happen here? I think that there's a very good chance that they will try to rally it and try to recapture this prior support level at the 1204 level. I think that recapture will in all probability fail. So members, more to come on Google. I'm getting a little bit long-winded here, so I'm going to speed things up. The next chart up is Hawaiian Electric Industry. We broke out last week, but we sold off the highs of the week. So we had a little bit of sellers or buyers back here looking to get made whole, and they sold into strength. Now, what I'm looking for this coming week is a pullback and a retest of the breakout point. That would be really good stuff. We have a breakout on Stokes. RSI rising, that's good stuff. Stoke RSI rising. Volume was a bit light last week. You know, on a breakout, you'd like to see rising up volume. It's a sign of institutional demand. We didn't get that. Daily chart, rising RSI. We were down slightly on, not slightly, a little over 0.75 percentage point on Friday. But this kind of illustrates what I'm looking for on a weekly chart. Remember on the weekly chart, let's go back really quick, visualize. Here's our breakout, right? So what we're looking for here is similar to what is setting up on a daily chart, a pullback and a retest of support. Because we broke out several days ago here on the 5th, rallied, now we're pulling back. We'll probably tap the breakout point. That's all good stuff, assuming that we hold. Volume was about average on Friday. Now, if we drop back down into this trading range, that would be a breakout point failure or a bull trap. We want no part of that. It immediately comes off of our list and could quite possibly become a short. So HE looking good, assuming that it holds support. Commvault Systems, let's go to the weekly chart first. All right, so very similar to what we are looking for on Hawaiian Industries, we got on Commvault. What do I mean? I just spoke about HE and the fact that we were looking for a pullback and a retest of support on a weekly basis. That's exactly what we got on CVLT. So while it was a down week last week, down 1.29%, it was actually a bullish week. Why is that? It's because we pulled back, we retested support, and we rallied off of it. So remember that traders are OCD. I said several weeks ago, when Amazon was at 1,800, I said it's going to 2,000. Why? It's because traders are OCD. They need to touch that big round number. Same deal here. Whereas we broke out, traders need to see the shares pull back, retest support, hold, then rally, and then they feel confident that what was resistance is now support. It's all psychology. Our Stokes are rising. Good stuff here. So Commvault remains a long watch as it was last week. As we proceed into the new trading week, daily chart, bullish key reversal on Friday. So members, we'll talk about when we want to pull the trigger on Commvault and where we would want to place our stop loss order on the week ahead commentary. The next chart up, Ecopetrol. We've spoken about this one in the past. We've been waiting for a retest of support, and we got it last week. So same deal. We've spoken about this a lot today, right? We want to see retests of support because it validates the breakout. So here we have a beautiful, again, if I didn't mention a weekly chart, a beautiful rounding bottom, a cup. We built that right side of the cup, forming a handle. We have broken out. We broke out 3 weeks ago, and we are now flirting with a retest. We came very close last week. We may get one last pullback this week. We'll go to a daily chart in a moment. Down volume is exactly what you want to see, declining. Now, to be fair, what we want to do is point out the obvious, right? We broke out the week of the 20th, but how is volume then? It wasn't that great. So we really need to see a retest here and then a breakout and a continuation move higher out of this base above 2276 on rising up volume, ideally. We may not get it, but members, we'll be watching this one very closely. Love the Stokes here. Ecopetrol on a daily basis, beautiful base. We broke out here August the 24th. We'll call this a retest here, the 5th of September. And it appears as though we are setting the stage for a breakout on Ecopetrol. So, members, we're going to talk more, again, about Ecopetrol on the week ahead commentary immediately following best stock charts. F5 Networks daily chart. This is the only chart I need here. We've spoken about this one in the past. Nice W formation. We have broken out of a sound base. We're consolidating. So a very healthy chart, assuming that we hold the 187.50 level, which we retested last week. And we will look to open up a position on F5 Networks. Now remember that while we have some charts here that I'm fairly bullish on, I have charts that I am fairly bearish on as well. And we have short positions. So we have been positioning away from the long side, more towards the short side. And with the performance of the S&P 500 last week, I am very, very concerned about this market's ability to continue to move higher in the short term. And seasonality does not favor the S&P 500 in the months of September and October. Now, when you take a look at the semis, another sector which we are currently short of, which is pretty darn ugly. We had broken out back here on the 29th, failed to hold support, rallied back, even took out the highs of the 29th on the 4th of September, and it was a breakout point failure. Now, for the higher level view, simply take a look at the semis. Weekly view. Bearish key reversal last week. Does this look like a sector that wants to move higher? I mean, you could argue that we are in a tight triangle formation and ever tightening. I believe that would be an accurate depiction of this chart, but we are threatening a breakdown. So we're going to be looking to add to our short position of the semis using the SOXS on the week ahead commentary. We had a good week last week, up nearly 8.5%. We'll be looking to add more. So, members, we'll be talking about what we're looking for on the SMH and on the SOXS for us to continue to build on our short position of the semiconductor sector. Let's leave off with Cal-Maine Foods, which has always treated us very, very well. I am very bullish on Cal-Maine Foods, not just because I eat a lot of eggs, and I do. And for you folks who are not familiar with Cal-Maine Foods, they are an egg company. Ergo my comment. So quarterly chart, you could see that quarter to date, we are above resistance. This is a very powerful chart here. And if we close out the month of September above this upper band of resistance, and especially if we close above 51.88, you're talking a major, major run here to the upside for Cal-Maine Foods. So members, we're going to talk more about rebuilding our position. We've booked profits here already. Now we're looking to reopen our position on Cal-Maine Foods. We'll talk more about that on the week ahead commentary. And that is it for this week, folks. Members, we're going to segue over into the week ahead commentary. If you're not currently a member, sign up for the 14-day free trial offer. Cancel at any time. If you are not ready yet, that's fine. That's cool. Follow me on YouTube. Click that bell button. Get notified of future free commentary, including Swing Trading Today, which I put out a couple of times a week, and, of course, Best Stock Charts. And if you enter your email address, We Hate Spam Too, you will get a couple of free trade tutorials as well as all my free commentary. Okay, folks, let's kick the week ahead commentary off with the 10-year Treasury bond yield. And you can see that last week we broke out and above this resistance level, which we haven't seen since the first week of August. Now, why does this matter? It matters